Welcome. In this video, will ZBCN coin make a new high? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully examine the chart, it's immediately clear that drawing a line between two prominent peak points reveals a highly meaningful structure. This line between the two highs corresponds to an ascending trend line, which is considered highly valuable in technical analysis. These types of structures are particularly useful in determining the direction of the price and analyzing the prevailing market psychology. The fact that an asset continues to make higher highs is generally a sign that buyers are gaining dominance in the market and the upward trend is strengthening. This ascending trend line does not only connect two past peaks, it also indicates potential future support levels. Trend lines are strong dynamic levels where price may react and define direction moving forward. That's why this line holds significance not only in terms of historical price action, but also for shaping what may come next. The fact that price recently touched this line and then moved upward clearly shows that this ascending trend line is being acknowledged by market participants. The price gaining upward momentum after touching this line suggests that buyers view this level as a support zone and are reinforcing their positions here. In technical analysis, touches to ascending trend lines are often seen as buying opportunities. This offers a strategic advantage to investors. When these touches are accompanied by volume, it reinforces confidence in the continuation of the trend. Ascending trends indicate that an asset is in a value-gaining phase and typically form the basis for decisions such as entering, holding, or adding to positions. Therefore, the current structure we see, an ascending trend formed by connecting two peaks, is not just a graphical observation, but also a key indicator of investor sentiment. The fact that this line consistently acts as support may serve as a safe zone for investors. Every time the price approaches and reacts at this level, it confirms the effectiveness of this structure. Another important factor to monitor in such ascending trends is whether the price continues to respect this line over the long term. Sometimes price will touch this line multiple times and bounce each time, further reinforcing the strength of the trend. In the current outlook, it appears the price moved upward after a recent interaction with the trend line, which strengthens the possibility of a continued trend. Additionally, the fact that these reactions come with increased volume suggests that major players in the market are also paying attention to this line. Large investors and institutions typically restructure their positions at such technical levels, which leads to more stable and sustainable uptrends. If this trend line continues to hold in the coming periods, the upward potential for the price remains high. In summary, the line drawn between these two peak points is not just a visually appealing curve on the chart. It is a technically meaningful structure that offers strong clues about how the market may evolve. The price's interaction with this line can directly influence investor psychology and market balance. In the current scenario, it seems the price has responded with an upward move after touching the trend line, which is a very promising sign for the continuation of the current uptrend. But we can't rely solely on trend lines for analysis. Let's also look at other metrics. Stay tuned. According to Elliott wave theory, the current structure we're in represents the third wave phase. As you know, Elliott waves are a highly powerful analytical approach that argues market movements progress in a specific rhythm and wave-like patterns. Especially the third wave, both theoretically and practically, is considered the most aggressive, strongest, and fastest moving part of the cycle. Therefore, entering the third wave is seen as a very positive and promising development for investors. When we analyze the price movement in detail, we observe that this third wave works very harmoniously with Fibonacci levels. Fibonacci levels provide important clues both in terms of retracement points and target areas. Currently, we can see that during this third wave, the price has risen to a critical level, namely the 4,272 Fibonacci extension level, and has experienced a slight pullback from there. This may signal a short-term pause in the market, but it's clear that the overall trend remains positive. The 4,272 Fibonacci level is generally considered one of the peak zones that can be reached in scenarios where third waves are extraordinarily strong. The fact that the price has reached this point alone shows how powerful the buying pressure in the market is. More importantly, the price has only paused at this level and appears to be preparing for another upward move. If this critical threshold is broken to the upside, it becomes very clear that there are no remaining Fibonacci resistance levels in front of the price. This is a very strong and positive signal from a technical analysis perspective. Fibonacci extension levels typically act as resistance, but breaking through them to the upside indicates that the market is now entering a discovery phase and preparing to move into previously untested price territory. So, if the price can maintain itself above the 4,272 level, it's not just a technical resistance being overcome. It's also a confirmation that investor sentiment has shifted positively and a search for new highs has begun. In such a scenario, the market transitions into what is technically known as a discovery zone. This zone refers to untested areas, and because there are no psychological boundaries, price movement becomes much freer. This allows the price to continue moving upward without facing significant selling pressure. For long-term investors in particular, this scenario presents an attractive environment for building new positions and further strengthening the trend. Furthermore, the break of the Fibonacci 4,272 level would be significant not only technically, but also in terms of pushing the psychological boundaries of the market. Many investors, consciously or unconsciously, refer to Fibonacci extension levels in their decision-making, and behaviors often change at these points. However, strong breakouts like this one increase investor confidence, bring new liquidity into the market, and support the momentum of price action in a positive direction. The mere fact that the price has reached this level already gives a very clear indication of the strength of the third wave. And from this level, the triggering of a new impulsive wave may lead us into the preparation phase for the fifth wave. However, we observe that the third wave is still actively continuing, as there are no signs of fatigue and the upward movements are still happening with strong volume. This indicates that the price could challenge not only technical boundaries, but also psychological ones. Looking at the overall structure of the price right now, we can see that it is still holding above the 200-day exponential moving average. This is a highly positive signal, especially when it comes to evaluating long-term trends in technical analysis. The 200 EMA is a key tool used by many investors and analysts to determine the direction of the trend. Price staying above this average clearly shows that buyers are in control of the market and that the price is in an upward trend. The 200 EMA is not just a randomly drawn line. On the contrary, it represents the long-term average value of the price. Staying above this average is a strong indication that the overall momentum is positive, the market remains buyer-dominated, and the trend is inclined to continue upwards. Especially on the daily chart, remaining above the 200 EMA suggests that a bull market is in effect, and that, despite possible pullbacks, the price may continue its path. Currently, the price appears to be consolidating above this average. This indicates that the level is working not only as a short-term support, but also as a psychological floor. Many market participants tend to maintain their positions as long as the price does not fall below this line. In fact, testing this line often presents new buying opportunities for many investors. Staying above the 200 EMA also keeps institutional investors interested. Large-cap funds and professional traders in particular tend to have more confidence in assets that remain above such moving averages and prefer to take long positions. This brings both volume and confidence to the market. Price holding steady at this level helps provide a healthy foundation for medium and long-term uptrends. The 200 EMA is used for long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.